How to invest with little money in 2024. 5 powerful strategies. Did you know it's possible to start investing with little money and still get a good return? If you think you need thousands of dollars to start investing, this video is for you. Today on Moz Wealth Minds, I'm going to show you 5 powerful strategies to invest with little money in 2024. Stay with me until the end, because today's tips can completely change how you manage your money. Before we get started, don't forget to subscribe to Moz Wealth Minds and hit the notification bell so you don't miss any videos on how to improve your finances. And if you enjoy this content, share it with your friends so more people can learn how to invest smartly. 1. Investment funds. The first strategy is to invest in mutual funds. They work like a basket that pulls money from several people to invest in different assets, such as stocks, bonds, real estate, and more. The great thing about mutual funds is that you don't need a large sum of money to start. There are funds with minimum investments as low as $100 or even less. The best part is that a professional manager handles the investments for you, which reduces the risk of making wrong decisions due to lack of experience. Of course, it's always important to read the fund's conditions and understand the associated costs, such as management fees. But overall, mutual funds are a great option for those with little money who want to start investing safely. 2. Treasury bonds. Treasury bonds are one of the safest ways to start investing, and the best part is, you can start with less than $50. By investing in treasury bonds, you are lending money to the government, which will pay you interest over time. There are different types of treasury bonds, such as Treasury Inflation Protected Securities (TIPS) and Treasury notes and bonds with fixed or floating interest rates. Each has its own characteristics and maturities, but all offer greater security than investing directly in stocks, for example. Plus, you can choose bonds that match your financial goals, whether short-term or long-term. Because it's a low-risk investment, treasury bonds are ideal for those just starting out and looking to grow their money safely. And since the initial amount is accessible, there's no excuse not to start. 3. Private fixed income. Another interesting option is to invest in private fixed income, such as certificates of deposit (CDs), mortgage-backed securities, and corporate bonds. These are securities issued by banks and companies, and you can start with small amounts, starting from $100, depending on the institution. A CD, for example, is like a loan you give to the bank. In return, the bank pays you interest on the loan amount. Mortgage-backed securities and corporate bonds also offer good returns, often higher than a savings account, with relatively low risks. These investments are great for those looking to diversify their portfolio with little money and get better returns than a savings account. Just remember to always check the issuing institution's solidity and the maturity date of the bond before investing. 4. Fractional shares. If you've always wanted to invest in the stock market but thought you needed a lot of money, the good news is that's not true. With fractional shares, you can buy shares of big companies with little money. Instead of buying a whole lot of shares, you can buy just one or a few, investing what you can. The stock market can offer a higher growth potential than other types of investments, but it's important to remember that it also involves risks. That's why it's essential to research the companies you want to invest in, understand the market, and if possible, get help from an investment advisor. Investing in fractional shares is a great way to start understanding the stock market, even with little capital. And the best part is, you can keep buying more shares as your money allows. 5. Automatic investments. Last but not least, let's talk about automatic investments, a strategy that's gaining a lot of popularity. With this approach, you set a fixed amount to be automatically invested every month, whether in stocks, mutual funds, or fixed income. Platforms like brokerages and digital banks offer this option very easily. The big benefit of automatic investments is the financial discipline they bring. Since the amount is automatically invested, you don't have to worry about remembering to invest every month, and it helps you avoid unnecessary spending. Plus, investing regularly is one of the best ways to grow your wealth over time. Even if you start with a small amount, The consistency of automatic investments can make a big difference in the long run. And the best part is, you don't have to be an expert to use this strategy. Just set it up and let your money work for you. These were the 5 powerful strategies to help you start investing with little money in 2024. As we've seen, you don't need a lot of money to start investing. The important thing is to take the first step and stay consistent. If you apply these tips, you'll definitely see your wealth grow over time. Did you like today's tips? Then don't forget to subscribe to Moz Wealth Minds and hit the notification bell to get more videos like this. And of course, share this video with your friends and family who also want to start investing, but don't know where to begin. Let's build a more prosperous financial life together.